We are learning accounting for inventories, and in this module we will focus on inventory costing methods, okay, which are FIFO and weighted average. Okay, let's see how to work out these two methods through some examples. But are you familiar with this diagram? Yes, we have discussed this diagram. So focus on this area. Okay, we are working out costing methods, and within this cost area, if you do remember that if the inventory is mutually interchangeable, in that case we use FIFO, means first in first out, or weighted average. We can use either of these two methods. Okay, there is no issue as to the International Accounting Standard if we use first in first out or if we use weighted average. So none of these two is preferred. We can use either of these two depending on our own judgment or on our own wish. Okay, but if the inventory is specifically identifiable, then individual cost method will be used. Okay, let's have an example with us. In this practice question, we purchased 5 units at 4 rupee per unit, and then again we purchased 5 units at 5 rupee per unit, and once again we purchased 5 units at 5.50 per unit. So there are 3 different rates. Closing inventory is 8 units with us. We purchased 15 units. It means we have consumed 7 units during the period, and the closing inventory is 8 units with us. The issue is, what should be the cost of this closing inventory? Given that we have 4 per unit, it is also cost. We have 5 per unit, it is also cost. And we have 5.50 per unit, it is also cost. This inventory of 5 unit, 5 unit, 5 unit was purchased on different dates, having different prices. So the question arises, either this 8 units should be multiplied by 5, or should be multiplied by 4, or should be multiplied by 5.5. So there is an issue with us. How to resolve this issue? This issue will be resolved with, what is coming in your mind? That we can take average of these 3? This is not correct. Okay, if you will take average of these 3, it is not permissible as per the accounting standard. So forget about taking simple average of these 3 prices. Come back. Well, so what is the resolution? The thing is that we will use first in first out method. What is first in first out? We will say that since we have consumed 7 units, how we got to know? That we purchased 15 units and closing inventory is 8 units. Means 15 minus 8 is equal to 7. We have consumed 7 units. So what we will say, that first in first out, those 7 units have been consumed preferably on priority 5 at the rate 4 have been consumed. First in, this was first in, first out. And 2 out of these 5 units which were purchased at 5 per unit have been consumed. So how much is left out of these 5 is 3 units with us. And altogether these 5 units are still unused or unconsumed, which were purchased for 5.5. So under this first in first out, remember it's out, okay? Under this first in first out method, 7 units have been out. What are with us? 5 plus 3. So this 5 will be worked out at 5.5, see over here, and remaining 3 over here will be multiplied by this 5 rate per unit. So total would be 5 times 5.5, 27.5, and 5 times 5 is 15. Total is 42.5. So using first in first out method, the cost of closing inventory is 42.5 and this is the closing inventory 8 units. Got it? Well, the next formula is weighted average method. It is also known as average cost method, or it is also abbreviated as WAVCO. Okay, so whatever the abbreviation, it is weighted average method. The thing is, its formula will be total cost of inventory purchased. We will work out total cost of inventory purchased. 5 times 4, 5 times 5, and 5 times 5.5. Just use your calculator and tell me what is the total cost. 5 times 4 is 20. 5 times 5 is 25. And 5 times 5.5 is 27.5. So make total of these three amounts and divide it by 15. What is this 15? Number of units purchased. These are the number of units purchased. You get a rate. Multiply that rate with 8. These are the 8 units. The total cost of inventory under weighted average is 38.67. Okay. So this is how we calculate weighted average based cost of inventory. Agreed? That's very fine. So the important tip to remember in this module is that IS2 allows only two methods for calculating cost of inventory, and that is first in, first out and weighted average. None of the other methods are allowed by international accounting standards. So we have to follow either FIFO method or weighted average method. Okay, thank you.